Welcome to today's Payments Podcast. I'm Tim Mills, Emerging and Digital Payments Group Manager at Regions Bank, and today I'm joined by Dan Grattan and Jeff Swartz, members of the Government Affairs team here at Regions. Welcome to you both.
Morning, Tim.
So I mentioned that you're both members of the Government Affairs team here at Regions. Maybe, Dan, you can give us an overview of your day-to-day responsibilities as a member of the team, and then Jeff, we'll toss it over to you.
Yeah, absolutely. Thanks for having us. The Government Affairs team is comprised of a small but we hope to be an effective group representing the bank both here in Washington, D.C., as well as among our states that we have our footprint in. And we all work for Elizabeth Taylor, who's the head of Government Affairs. And my responsibilities are primarily focused on advocacy on Capitol Hill, and I have a specific tilt towards the House of Representatives. Elizabeth used to work in the Senate, and so she spends a lot of time there. But we also work with our trade associations, other partners, other banks, and trying to both advocate for needs of the bank as well as our customers and our shareholders. And we try to do that as best we can and here in Washington and again throughout the states.
Fantastic. It has to be an interesting day-to-day round of activities that you get involved with, Dan, in your role. Hey, Jeff, tell us a little bit about the things that you're doing in Government Affairs.
Sure, yeah. So I have a very similar role to Dan with just a different audience. So I handle regulatory affairs for Regions, and my role is to advocate on behalf of the bank on public policy issues at our financial regulatory agencies. So this is primarily on the rulemaking side when the government agencies propose new regulations. We try to put forth Regions' point of view to make sure that's heard.
Excellent. And of course, a big focus for Government Affairs obviously is to not only make sure we're advocating on behalf of Regions, but really indirectly, it's also an advocacy for the customers that we serve. So really big work that both of you are involved in. But this morning, we're here to talk about really payments, because that's what this podcast is about. There are two very hot topics in this payment space here over the probably last 18 months or so, and that is FedNow and central bank digital currencies, or CBDCs. And we're going to talk about both of those items during our time together today. Just as a quick primer for our audience, FedNow is a new instant payment bank-to-bank network that's being stood up by the Federal Reserve. And it's scheduled to be available later this year. It will operate very much like automated clearinghouse or ACH payments that many members of our audience are using today to make bill payments, to receive or make payroll or tax refunds. What makes FedNow different as a payment type, and it is just that, a payment type, is that instead of it taking days to process payments, which when you look at our legacy payment methods that we have today, in most cases, it does take days for a payment to process. The FedNow payment service will allow payments to be both sent and received within a matter of seconds. Now, Jeff, there's been a lot of discussion in the media about FedNow, this new payment type or payment rail. Can you talk a little bit about, from a policy perspective, what is the driver of the Federal Reserve rolling out a new payments rail specifically at this time?
Sure. Thanks, Tim. I think before I jump into the specifics, I think it's important to note that all of the FedNow's functionality that's going to be rolled out already exists in the market through the RTP network, which was launched in 2017, is operated by the Clearinghouse, which is collectively owned by several banks. So it's not maybe not quite the sea change in technology as some of the media reports have have made it sound like. And so it's also important to note, as you mentioned, the Fed is already in the payments business. The Fed and TCH each operate their own ACH network. So in a sense, this is going to be very similar, where there's two instant payment networks, one operated by a government entity and one that's operated in a private network. So I'll jump in now to sort of what I think are the Fed's real motivations here. So first, I'd say, in a sense, they were told to do this. In 2017, the Federal Reserve's own Faster Payments Task Force that included industry and consumer advocates and a whole bunch of public stakeholders published its final report, and they requested in that report that the Federal Reserve develop a 24/7/365 settlement service to support instant payments. And then the Treasury Department quickly concurred with that recommendation and recommended to the Fed that they pursue that. So as a result, the Fed began the process of building this real-time gross settlements service for faster payments in 2018. So second, I'll just say that the existing payment rails are getting old. The ACH networks were launched in the late 60s and early 70s. So I think that's a big primary driver, just getting up to modern technology. The third reason, and possibly I think the biggest motivator here, and some Treasury and Fed officials have said this recently in public speeches, but since the Fed and TCH currently operate the ACH networks, and TCH has already launched RTP, I think the Fed believes they must establish this second operator alongside RTP in order to promote competition, which will lead to more innovation and lower costs. So you know, they don't want to leave it as a single source here that has a monopoly on the technology. And finally, the Fed thinks that it can speed up nationwide adoption of the instant payment technology by leveraging their existing payment services relationships that they have through the ACH network with more than 10,000 banks and credit unions. And then eventually, I think they hope to deliver government payments like Social Security and tax refunds through their network. And I think just an interesting historical note that it was the Air Force's decision to move their payroll to direct deposit that really, in the 1970s, that really sped up adoption of the ACH payments system. So, you know, they could be onto something with moving government payments here, and that would really speed up adoption of faster.
Yeah, you know, that's a great summary of some of the drivers to first of all, even within the country, within the United States, to move to instant payments. Let's face it, we all live in a real-time world. If I send an email and Dan doesn't respond to me within about 5 minutes, I'm wondering, you know, when is he going to respond? And if I send a text to a family member, I expect that response to be immediate. And I think the expectation when it comes to payments has also carried over, and there is an expectation that our payments should not take days in order to process. And both, as you mentioned, the private sector player in the space, the clearinghouse, as well as the Federal Reserve, obviously are committed to moving the country in that direction in terms of speeding up the way that we're either able to send payments or to receive payments. That being said, Dan, you know, the second topic that we're going to discuss today, central bank digital currencies, or CBDC, is really been making the rounds not only within the media, but also over the internet and within social media, which can sometimes be a good thing and sometimes maybe complicate matters a bit. Just again, as a quick primer for the audience, a central bank digital currency, or CBDC, is really a digital version of a nation's or a sovereign's currency. And there are about 60 or so countries across the globe that have either already implemented a central bank digital currency or are exploring the issuing of a central bank digital currency. And here in the US, we really fall into that second bucket where a central bank digital currency, first of all, would be the equivalent of a digital dollar. The Federal Reserve is exploring, what is the value proposition of a central bank digital currency within our own ecosystem here in the United States. They've conducted tests to gauge the technical viability of such an offering, but they have yet to develop a plan to move forward, or even a decision to move forward in terms of issuing a central bank digital currency. I think it's worth highlighting that FedNow and the CBDC initiatives are two separate offerings. FedNow is a payment vehicle. It's a way to make and receive payments in U.S. currency, whereas the central bank digital currency is, or CBDC, would be a currency in and of itself. So the other differentiator is that FedNow is being implemented and will be live this year, whereas the issuance of a central bank digital currency is only being explored. And because it would be a de facto new form or be added to the recognized currency here in the United States, it would require an act of Congress to be implemented, again, because it would be a new form of currency, and Congress is the only entity that has the authority to authorize that. So, Dan, keeping in mind that FedNow and CBDCs are two very different initiatives, what are you hearing on Capitol Hill regarding the plans for the current administration to implement a digital dollar or a CBDC?
Yeah, and I think this has definitely all gotten quite political, as you said, on the Hill and the White House. So everybody's focused on this, but of course, so are the voters out there, people who are looking at this pretty closely on both sides of the spectrum politically. And you gave some background, but just to go into a little bit more, I guess this all started last year, kind of before the crypto winter, when President Biden announced his general vision for what he called kind of the digital dollar. That's how he summed it up, referring to the CBDC as part of kind of a future look at currency and payments, cryptocurrency, etc. And he signed an executive order that spurred that design and deployment options for the CBDC that you kind of referenced. That, I would say, began the political storm that this has turned into. But then in September, the White House's Office of Science and Technology, the policy team, they issued a report that kind of did a technical evaluation of a U.S. CBDC. And they pointed to some of the potential benefits, like faster low-cost payments, potentially greater access to the banking system, and keeping the U.S. central in the world financial system, which to me was shorthand for keeping up with China. But I guess it also recognized some potential major pitfalls, data security and potential destabilization of the financial system for two big ones. And to me personally, who's someone who's a bit of a CBDC skeptic, admittedly, it reminds me of one of those pharmaceutical ads where you have a product that cures a minor ailment, but also might have side effects, including sudden death or dismemberment. So you've got this potential for faster payments, which we've already said is kind of, it has already been happening for some time. But then you've got a real risk of, again, kind of dual track currency, which is a whole bigger issue. But Tim, like you said, the Federal Reserve is already doing significant experimentation on the CBDC systems and is leading kind of a broad program that's rooted kind of in the fundamental nature of a CBDC as a liability of the central bank. And they have asked for some comments on that work. And I think they're still reviewing those. The bigger piece is that the White House is really coordinating with Treasury on the future payments, right? So there's a lot of executive branch stuff happening there. And I think it's safe to say that they were really thinking about how to do this but the buzzword to look for is that they have not yet deemed it in the nation's best interest, nor has it been given the green light. So this is one of those things that's a moonshot idea, and those are always complicated endeavors for sure. But presidents don't really win or lose elections on most moonshot ideas, except this, of course, has to do with American voters' hard-earned money. And as such, this process carries with it significant political risk for the president. But again, FedNow, CBDC, completely different things, and that's just kind of focusing on the CBDC side of things.
Yeah, so obviously from an administration perspective, there is interest in really probing the value proposition of a CBDC or a digital dollar. As I mentioned before, just to be clear, issuing a CBDC would take an act of Congress. At this stage, from what you're hearing, is there any sort of a legislative appetite or even a priority on either side of the aisle to take this on in this current session of Congress if the administration wanted to push the issue?
Yeah, and a great question, and that's kind of where the rubber meets the road, right? So yes, to answer the question, it would take an act of Congress to issue a CBDC. The Fed themselves has actually stated they understand that, and they don't intend to proceed with the issuance of a CBDC without clear support from both Congress and the White House. Of course, it seems like they have that from the White House as far as starting the engines, but again, nothing has been greenlit. And yeah, I would say that it's a legislative priority, but it's kind of important to note that the issue is being looked at very differently by various factions of Congress, and there are multiple ideas as to how to manage the issue legislatively. In talking to some members this week, the overall kind of theme is that Congress does have to grant that authority, but yet they have currently no interest in granting them that authority. But let's take a look at kind of some of the ways people are looking at this on the right and the left and in the middle. Let's start in the middle. There's a bipartisan effort in the House from a Democrat, Jake Auchincloss, and a Republican, French Hill, to basically explicitly state, perhaps redundantly, but belt and suspenders legislatively, that Congress must approve any CBDC effort by the Fed, right? They want to restate that. That's one of the bills. Some folks are so against it that they've introduced legislation actually barring the Fed from doing a CBDC. There's been legislation introduced in the Senate, mainly by Ted Cruz, and in the House by Tom Emmer from Minnesota, who's an extremely influential of leadership there. Looking at Emmer's bill specifically, it's called the CBDC Anti-Surveillance Act, and if that kind of gives you some of the idea of where some of the media reporting is on that on the right, and it basically bars the Fed from providing accounts services directly to individuals, issuing a CBDC. So to date, that legislation hasn't gone anywhere, but I think that's it serves as a good marker for where some of the Republicans are in their relationship of trust level with the Fed. On the other side of the aisle, at least on the more progressive side, there's been calls in previous Congresses, basically the last Congress, in both the House and the Senate, focused on something called the Payments Modernization Act, and that's trying to speed up the process of deposit checks and bank accounts, theoretically kind of greasing the wheels for FedNow to come along. Important to note in that, even that legislation refers to FedNow as a faster payment system, not a CBDC. So it really focused on the faster payment aspect. There's also a significant effort in the House to bring forward legislation of government-approved issuance of stable coins by third parties, and this is kind of where it gets a little bit in the weeds. But stablecoin legislation, either by banks or non-banks, some are seeing that as a backdoor to issuing a CBDC just by another name, given the potential requirement to register as an issuer with the government of a stablecoin, and then perhaps transact personal information with the government itself. There's different views on that concern, but we will learn a lot more about that towards the end of July when we're anticipating there's going to be a vote on that stablecoin legislation. Again, not directly CBDC legislation, but there's going to be a vote on the stablecoin bill in committee in July. And I guess I would just kind of sum it up by saying all these ideas have been introduced, but none of them have really gone anywhere yet. But with so many voices, it's pretty difficult to predict which pathway is going to win out in the end, right? So to me, and kind of through all this conversation, I think we're saying the same thing. With so many voices and the nexus of all of those ideas, broad access to faster payments is kind of the silver bullet. Jeff mentioned the RTP network's already in place. the legislators on both sides of the aisle are interested in getting people their paychecks and other transactions in real time. And however that can happen via the private sector or government intervention, that's probably going to be the thing that makes the modernization efforts reality. But, legislatively, it's going to be an interesting next few months to see how it all plays out.
Yeah, I mean, lots of moving parts there. I think, as you mentioned earlier in your comment, you think about this being a moonshot in terms of the issuance of a CBDC. I mean, it seems as though that is going to be a journey, and it's a long journey indeed. We're nowhere very far beyond just the start of it. Jeff, let me pivot back to FedNow. Again, as a payment rail, financial institutions across the United States are either already offering instant payments through adoption of the RTP network, or are considering implementing the FedNow solution when it's available this year. These instant payment rails such as FedNow are going to operate just like any other payment type, except that they'll provide that additional functionality of speed. My question to you is, can you speak a little bit about will FedNow have the same level of safeguards and requirements for privacy and security of transactions that checks do and ACH and credit and debit card transactions do today? Can Regions customers expect that same level of payment security?
Yeah, it's a great question, and I think just particularly from our customers' perspective, and I think the short answer to all of that is yes. All of the current regulations regarding payments still apply to this new technology. Most importantly for our customers and consumers generally, FedNow payments are covered by the Electronic Fund Transfer Act, EFTA, which provides them with protections against unauthorized charges and errors. At the same time, we are talking about speeding up transactions by moving money from one account to another instantaneously. So this is undoubtedly going to bring new fraud risks. So it's incumbent on us in the industry and at banks to continue innovating new technologies to keep trust in the system from our customers. So it's also important that regulatory agencies provide flexibility when needed for us to prevent that fraud. And I think, for example, the Fed has already taken a step in this direction by clarifying that financial institutions are allowed to place holds on FedNow payments when there is a reasonable cause to believe that the payment may be related to fraudulent activity. So giving us that flexibility from the regulatory standpoint is really going to allow us to protect our customers. And I think it's a really important partnership between financial institutions and the regulatory bodies.
I mean, this sounds somewhat overstated, but I don't think that it is. It's a very exciting time in the payment space here in the United States. I think it's worth bearing out that as a payment system, historically, the United States has led the way. I personally have had the opportunity to work with several central banks across the globe, and am thoroughly convinced that the payment system that we have here in the U.S. Really is a state of the art, best in class, and super excited as we await the rollout of FedNow as a new option, and Regions intends to bring that in the near term to our customers and all of the benefits thereof. And then obviously, as the conversation continues around central bank digital currency, we have great professionals such as both of you gentlemen, Dan and Jeff, really looking and monitoring this from a policy perspective in terms of what's taking place within the halls of government. Listen, thanks to both of you for joining the podcast today, and to the audience, thanks for taking time out of your day to listen. We look forward to speaking to you soon. This is Tim Mills signing off. Thanks a lot.